in a row. Now I'm just trying to figure out if I can get my phone here to sit steadily because here we go. There we go. Yay! Hey Marie, it's so good to see you. I haven't seen you in a while.
Hey, Nicole. I know it's been forever.
I know. Well, I appreciate you coming on tonight to help me with Ask a Realtor.
Yes, thanks for
I
having
want to
me.
make sure that I let everybody know, listen, this live is not going to work if you're not asking your questions, if you're not telling us what it is that you want to know about buying a home, about selling a home, about investment properties, or even about being a realtor, a real estate agent for that matter.
Yes.
We want to know, and we want to hear from you. So make sure that you do us a favor and put your questions in the comment box so that we can see those and that we can know what exactly it is you're asking when it comes to questions. So again, I'm super excited to have everyone here. The crowd is, you guys have seen me like come on like 3 times tonight, so those will be deleted. You won't even see those. You'll just see this one, okay? So listen, I'm super excited to introduce to you all my guest tonight, Marie Peppers, Senior Loan Officer with Movement Mortgage. Now, I have been knowing Marie for quite some time now. We've done quite a bit of business together over the years, and she knows it. She knows it, okay? And I love when people know it. And so I am going to be partnering with her and various other realtors that I'm connected with as well. I'm going to partner with some other lenders that I'm connected with. I'm going to partner with some financial advisors. I'm going to partner with quite a few people on Ask a Realtor. And we're going to be giving you the answers that you want to hear to the questions that you're asking, okay? And so without further ado, Marie, I would like to just start off with you just kind of telling everybody who you are and a little bit about yourself. How you kind of got into the industry, and then we'll go from there.
Well, first I want to say thank you, and I'm so proud of you for all the things that you're doing. You're really doing it out here. So she's an awesome realtor. So anybody out there, you have the best right here. My name is Marie Peppers. I'm with Movement Mortgage. I have been alone in this business for about 17 years. The way that I got into it is I was working as an assistant to a realtor when I first got into the business 17 years ago. And I really loved the business, and I was very personable. And a loan officer came in to call on us at the real estate office and told me that I should try to get into this because I had the personality. So that's where it started. And I've been doing this ever since. I love it. I love helping people. I've done a lot of business with Nicole. We've taught a lot of classes together, and I look forward to doing big things with her.
Yes, I am so glad that you said we taught a lot of classes together. You know, I was with a previous company before I, by the grace of God, was able to walk away and launch my own company in the middle of a pandemic, mind you. And before then, at that previous firm, every year you had to write a business plan. What your goal was, how you were going to be making money, how you were going to bring money to the company. And one year I said, you know what, I think I want to start doing free workshops. And Marie was one of the first people that I partnered with on those workshops. And we would get up and we would do them on Saturday morning, whether one person showed up, nobody showed up, 15 people showed up, the show went on. And I did that for 3 years straight until the pandemic, and then we had to stop doing them face to face. And so I'm trying to figure out another way to get you guys the answer and get you guys the info. And so I decided to do Ask a Realtor, and that's actually with the help of my videographer. If you guys go to my YouTube page, Coles Keys LLC. Every month I do a market report and I let you know how the market is doing here. And so one day in filming, my videographer was like, hey, you got to put some different content out there. And so we came up with the topic, Ask a Realtor. And so we'll be posting some videos over there. We're going to be doing some different lives, like I said, but definitely, let's get these questions because this doesn't work without your questions. We're going to start out though with just some basic information so that with this basic information that we're going to give you, you kind of have a clear understanding or maybe not quite clear, but at least a good basic understanding of what to expect when it comes to buying or selling a home. And we're going to start with just talking about buying a home, okay? Because that's what the majority of the people want to know about. Once they bought a home, they like, look, I got it from here, okay? So we're going to, again, just start with typical questions that we get from buying a home. And a lot of times, Marie, and I'm going to address this question to you because as the loan officer, you're the one who really knows the best answer for that. And I know I would like for you to pose the answers in such a way that prior to COVID, it was this. But now because of COVID, it's this. Because I don't like for people to be like, well, you know, last year you had said,
right.
okay. So the number one question, and understand a lot of the answers may vary from lender to lender. So
right.
you're with Movement Mortgage. So my favorite question, what does my credit have to be like?
Okay, so and that is a good question because before COVID, everything was different. So COVID has changed everything, and things change from day to day. We can have changes during the day, so it's just an ongoing process. So prior to COVID, your credit scores were a lot different, but right now with FHA, we can go down to a minimum score of 580 now. We're back to 580, but there has to be there's some things that go with that 580 credit score. You have to have reserves. We have to be able to verify your rental at least for.
I'm going to interject there.
I thought you froze.
I'm just going to interject there. I just want to interject there because you said we have to have reserves. And when we're doing this live, Marie, I want to assume that nobody knows what the terminology is. Okay. So let's break down what you mean by we have to have reserves.
Okay, so what reserves is, let's say that I can qualify you for an $800 payment. We need you to have at least 2 months of reserves in the bank. So we need you to have at least like $1,600 in the bank. As that's what we call reserves. Reserves can be bank accounts. They can also be 401k accounts, but they have to be reserves that we can verify. It can't be money from sitting under your mattress. It can't be money in your wallet. We have to be able to see that in your bank account. So that's what we qualify as reserves. That's what we state that reserves are. We have to be able to verify that you have 12 months worth of rental history. That means wherever you have resided or leased for the last 12 months, we have to show that you have paid rent on time, no evictions, no late notices. So that's important. That's with FHA. We have to be able to show those things. We don't want lates in the last 12 months. We don't want a lot of collections. Collections over $2,000, we have to now count those against you as a debt over $2,000 in total. So we do have to count those things against you. If we have DU findings, we run it through what's called direct underwriting. And if it comes up and says we have to count that against you, yes, we have to count that. So someone has a question right here. Okay, that's your expertise on there. So again, FHA is back down to 580 credit score, conventional, a minimum of 620. But again, we want you to have, conventional, we have 5% down. FHA is 3.5% down. So that's the difference between the two programs.
Now, Marie, there are 4 standard, if you will, types of loans that most first-time home buyers can use when purchasing a home. Let us know what those loans are.
We have FHA. Are you talking about the FHA? Okay, we have FHA, which is a first-time home buyer, which is 3.5% down. We have conventional, which conventional is 5% down. We also have VA for all the veterans out there, which is 100% financing. It just depends on if you've used your VA entitlement before or not. But I want to make it clear that with VA, it takes care of your down payment, but it does not cover your closing costs. So that's where a big misconception with VA is. So it does not include your closing costs. Then we have USDA. We have USDA loans also, and those are for the rural areas. And we'll check your address to make sure you qualify for that. And there's income guidelines to go with that as well.
Okay, awesome. One of the questions here someone asked was, can a gift from a relative qualify as reserves?
Not when you're with the 580 to a 620 credit score. They have to be your own funds. So a gift funds, no, they have to be your own funds when you have the lower credit score. But when you get into the higher credit scores, yes, we can use that as reserves. A gift can be used as reserves.
Okay. Now, with the lower credit score, can gift funds be used like towards your down payment or towards your closing costs? I know we said not towards the reserves, but can it be used towards those other two items?
Closing costs, yeah, we can use it there. But when you're in those lower credit scores, we want to see you using your own money. You have to have some skin in the game. That's what they want.
Okay. Y'all hear that? Skin in the game. So if you have not been saving, hunty, you need to start saving.
Start saving. Yes. Put money away every paycheck. Just, tax time. Taxes are coming. If your money goes into the bank through the IRS, a direct deposit, we can show that on your bank statement. So tax time is right here. So that's your own money.
While we are on reserves, can I use my 401k or any type of stocks and bonds and assets, mutual funds that I may have for my reserves?
Absolutely, you can. As long as we can verify it and we can get a statement with all your information on it, we absolutely can.
Okay. Let's see what other questions we have here. Mr. Godwin, I'm going to come back to your question in just a second when we get to that portion, okay? How important is housing expenses ratio in assessing having to buy multiple properties? So if someone wanted to buy multiple properties, how's the debt to income ratio factored in that?
With buying
multiple properties. So let's say they already have a house and now they're ready to buy some investment properties, or they want to buy 2 or 3 properties at one time. How does your debt to income and any type of other housing expenses that you have factor into that?
Okay, so let's say you have a house right now and you're going to keep that house and you're going to go buy another investment property. Well, we're going to count that debt against you unless you've leased it out, or unless we can show on your tax return that it just depends on which loan you go with, because each loan, there's different qualifications. So it just depends on which loan we're going to go with.
Okay.
How we're going to factor
what we can do for the person that posed that question is we can get you on a one-on-one call with Marie so she can assess your specific situation. I always tell everybody in real estate, everyone's experience is different. And I say that because your personal situation is different. So again, tonight, this is just a generic kind of overview. If we can't specifically answer your question, like I said, we'll get you with a one-on-one call so that we can get that question answered. So keep those questions coming.
Absolutely.
So we know we need what our scores are for credit. We know we have to have reserves. We know we have to have down payment depending on the 4 loan types that you went through. But let me ask you this. What are my options if I don't have down payment?
We have down payment assistance. Down payment assistance is coming back in March 1st. We're doing down payment assistance. Down payment assistance requires a middle credit score of 640. No exceptions. It's 640. Can't get around that 640. We have debt to income ratios. And again, that's based on everybody's credit, everybody's personal credit and their income. So again, we have to run everybody's scenario separately to determine how much they can qualify for, if they can qualify for down payment assistance. It's based on income. It's based on how much debt you have. So we do have down payment assistance programs to help you coming in March.
Awesome. And for those of you that are watching, be sure to share this on your page so we can get some more people in this, so we can get all these questions answered. This is great free info that we are providing to you, because we know that when you know better, you can do better, right?
Exactly.
So I wanted to also point out that with down payment assistance, you're typically at a higher interest rate, right?
The rates are a little bit higher. I don't know what they are yet, but they are typically higher than what the going interest rate is. They are, because it comes with a price. That free money comes with a price.
Yeah.
There's nothing free.
Yeah, it's not really free, just so you know. And so since you're at a higher interest rate, I want you all to understand that that kind of decreases your purchase price amount because money is being taken away from what could be going to the home to pay for this higher interest rate. So again, that's why savings is so important.
Saving is very important because sometimes it comes down to down payment assistance versus you having your own down payment. Sometimes, a lot of times, you having your own down payment is more advantageous because you can afford more. Because again, you're going to have stricter debt to income ratios when you're using other people's money via down payment assistance. So, save your money anyways.
Exactly. Now, the market, I presently reside in the Charlotte-Mecklenburg area, okay, but I'm licensed in North Carolina, South Carolina, and Georgia, and I want you to understand that the market across those 3 states are not different. They're exactly the same. So under a certain price point, we are in what is called a seller's market, and a seller's market just simply means there's more buyers out there trying to buy homes than there are people selling those homes. And because of that, the competition is really stiff, okay? I always tell people to remember the 80-20 rule, and you know what the 80-20 rule is. You're only going to get about 80% of what you really want. And so that other 20%, you've got to kind of decide, is it worth it? So if I find the perfect house and it doesn't have a 2-car garage, it only has a 1-car, am I walking away when there's 15 other people who want this house? I can't decide that for you, but those are the types of things that will come up during the process that you've got to kind of decide what it is that you want to do. Okay, so we've gone over credit, we've gone over the loan types that we have, and so now, Marie, I need for you to let my people know the difference between being pre-qualified versus being pre-approved.
Being pre-qualified is when Mr. Borrower calls me up, ring, ring, ring. Hi, Marie, I want to buy a house. I'm going to tell you what I make. I take your information. You tell me what you make. You tell me what you have in the bank. I pull your credit and I pre-qualify you. The key to this is you're telling me everything. I'm believing you. So I base that on everything that you have told me. That's what a pre-qualification is. A pre-approval is when you send me all your information, your taxes, your W-2s, your paycheck stubs, your bank statements. I verify all that information and I can actually get a pre-approval where all your information is pretty much verified. So that's the difference between a pre-qualification and a pre-approval.
Awesome.
One, you have stated what you make, and the other one, I have it factual in my hand and I can prove what you have told me.
That's perfect, because I say that all the time. Stated income versus proven income. You know, it's not about what you say, it's about what you can prove. And so to my business owners, entrepreneurs, okay, I just bought a house earlier this year, so I know what I'm about to say next, okay? When you are doing your taxes and you are writing off taxes, okay, guess what? There's a thing called adjusted gross income. And that adjusted gross income is what they're going to go by. So after you've written off all your taxes, okay, all your expenses, your car note, the trips to Office Depot, lunch, dinner, whatever it is that you're writing off, once you've gotten that $100,000 down to 40,000 because you don't want to pay the taxes on 100,000. Guess what? The income they're using is the 40. They're not using 100. And now you don't qualify for as much house as you would have had you not did all those write-offs. So Marie, is there a way around that?
No, we can't. No, we
just checking.
No. It happens every day. You have self-employed people that make money. They know they make money. They make money every year, but they write everything off. And at the end of the day, we have calculations that we go by, and that's the bottom line. We can't do anything about that. It is what it is. So all those write-offs, if you're planning on buying a house, prepare yourself, pay your taxes on that money that you've made, claim what you need to claim so that you can purchase the home that you want. Because I've seen a lot of dreams shattered for self-employed people. A lot of dreams shattered. If people know that,
I've seen a lot too.
For people, that make the money but can't prove it on paper.
Yeah. So I always tell people, hey, listen, if you own a business, you're an entrepreneur and you do not have a home yet, and you want a home in the future, you need to start planning this out 2 years in advance.
2 years in advance. Yes, ma'am. 2 years. Yes, ma'am. And put money in the bank that we can show as well. Another thing that we can show that that's your money, right? Because you can't all of a sudden just dump money in the bank, and we won't count that.
Right.
Because we have something called a paper trail. So we have to paper trail everything. We paper trail everything. I know a lot about you at the end of the transaction.
Exactly. And I'm telling you,
said, I didn't have to do this 10 years ago. Well, we didn't have to do a lot of things 10 years ago, but now we know everything. We know everything about you. And the way I say it is, let's say that this is your own money. Let's say if you were going to loan somebody $200,000, what extremes would you go to determine that they're going to pay you back? So that, when people get frustrated with the items that we ask for, I kind of pose that question. Well, if this was your money and I was loaning you were going to loan me $200,000, what would you need for me to prove to you that I'm going to pay that money back? And then their clients are like, okay, I get that. So we do ask for a lot of paperwork up front, but if you give the paperwork up front, it's a smooth process. Right.
Very easy.
Very smooth.
At least the lending part of it.
Yeah.
Now we're coming to the hard part. You've decided you got to find a realtor to work with, and you don't know if Nicole is a good fit or not. I don't ever assume that just because you're on this live, you're going to work with me, okay? But I always want to make sure that you understand that I'm not going to lie to you, okay? And while you're researching it, you're trying to find that perfect realtor. Keep in mind, number one, men are not perfect, women are not perfect, okay? But we are out here doing the best that we can to ensure that we get you the best that we can, okay? Exactly. So ask the questions. Don't ever feel like there's a dumb question when it comes to purchasing a home. Make sure that you understand that you can ask whatever question you want to ask, and if someone is getting upset about the question you're asking, that might not be the person for you. You do need to make sure that it's a good fit, okay?
Exactly.
I do awesomely want to just thank everybody again for jumping on the call. Make sure you're sharing this and inviting other people to the live. But we're going to jump into, now that we've gotten pre-qualified, or rather pre-approved, because in this market, we would prefer that you're pre-approved versus pre-qualified when it's time to purchase a home, whether this is your first home, your second home, your 10th home, okay? I can't drive you around showing you houses without knowing that you can buy houses. In fact, there are some, I have a house today that a young lady sent to me that she wanted to see. And when I called the agent to find out what was going on with the house, the agent said, we are asking for a loan commitment letter. And I was like, whoa, because loan commitment, I want you all to understand, means that they've already done an appraisal on the house. Right. So all they need to know, all they got to do is title work. And so I said, well, how's that going to work? And she said, well, the previous buyer was an FHA buyer, so the appraisal has already been done. It only needs to get transferred to the new lender, and they're only going with someone who has that loan commitment.
Wow.
So that was a first for me, but sellers ain't playing out here. They're not taking no chances, okay?
No, they're not.
You got to make sure your stuff is on point.
And you have to get pre-qualified or pre-approved. You can't just go out, find a house, and decide, oh, I want to put an offer in, because you don't know how much you can afford. You can think you know how much you can afford, but the key is you have to get with a lender to see what you can qualify for. It's the most important step in the whole process, is finding out where your credit is, what you can afford, what you cannot afford. Are you going to be comfortable with this payment? Get pre-qualified, call a lender, see what you can afford. See if you're looking in the right price range.
And as soon as you have your pre-qualification and the lender says, hey, I've pre-qualified you for this amount, but I still need X, Y, and Z, get X, Y, and Z to the lender ASAP.
Exactly.
Don't take a couple of weeks to get it. Send it the next day. Same day if you can.
Exactly.
I'm
Because
sorry, I
then
sounded a little frustrated then.
all of a sudden you haven't sent me what I need, and then on a Saturday at 3 o'clock in the afternoon, you've went by and saw a house, and then you want to put an offer on the house. Well, you haven't sent me the paperwork that I need, so I can't send you or Nicole the letter that you need to get so you can put the offer in the house. So those are some of the setbacks that we have. So get pre-qualified, send the paperwork in, go find your dream home.
Now that we've gotten our qualification, we've done what we're supposed to do, and we sent our loan officer all our additional paperwork to make life easier in this process. And you say, Nicole, hey, listen, I'm ready to go shopping for my house. And so I don't know about other realtors, I do an actual one-on-one consultation with you called a buyer's presentation, where I kind of walk you through the steps and make sure that you know exactly what to expect throughout the process. I go over the Working with Real Estate Agents brochure with you, and then I have you sign an exclusive buyer agency agreement to work with me, okay? But it's time to go out. We've done all of that. What do I need to know first, Nicole? Well, location, location, location. You got to know where you want to be, okay? And you have to be open to other areas. Why? Because when I got in this industry 9 years ago, almost 9 years ago, we used to run searches for people, and it would come out with 5,000 different listings. And you'd have to go in and filter it out, and you'd be lucky if you could get the 5,000 list down to 200 homes. You have to physically have to go through and kind of, based off of your client and what you know your client is looking for, kind of look yourself to only send them 20 to 25 homes so that they can choose 3 or 4 for y'all to go see. Okay.
Remember that time.
But now, let me tell you something. I ran a search for a gentleman just the other day, and he said, I want homes under 200,000. I only want to be in the city of Charlotte. I put in the city of Charlotte under 200 dash and below. That means and below. It was 9 houses. 9 houses, people. That's how tough this market has gotten. And so you have to do everything that you can to be prepared. So kind of know where you want to be, but also be open to other areas. Okay. Next thing,
flexible.
What kind of features do you want? Flexible, yeah. I'm telling you to know what your non-negotiables are and your features are, but really I just want you to just take any house that you can get. I'm just kidding. Just kidding. But you do have to be a little bit flexible, okay? Mm-hmm. You can't expect to walk into, unless you're doing new construction, walk into a house and not have to do anything to the house anymore. That expectation is just unrealistic these days. And for those of you all, Hunty, that say, what God has for me is for me, I want you to understand one other thing. Faith without works is dead, okay?
Yes.
He can't give it to you if you're not putting yourself in the position to get it. If you're not opening your mind enough to get it, okay? Because for every one of you that says, what God has for me is for me, there's 80 other people saying the exact same thing, and God can only answer one person's prayer on that house. He can't answer it. Everybody can't answer their house. So we always want to make sure that you understand that faith without works is dead. You gotta do what you gotta do, okay? And I'm not saying let's go take the shack that's falling down and needs a brand new toilet, and when you step in the front door you're falling through. I'm not saying that at all, okay? Because number one, your loan type ain't gonna allow that, okay?
No,
that's a renovation, and that's a totally different loan type, okay?
Right.
But what I am saying is, if it has a 2-car garage, if it has a 1-car garage and you wanted a 2-car and everything else is good, take the 1 car, okay? Because I guarantee you the 2 car is gonna cost you a good 10 to 15,000 more. All right. So
that's what she's talking about.
We've done we talked about our credit, we talked about loan, we talked about kind of what to look for in a house. I told you that I would go over a professional buyer's presentation with you when we're in there. But what other questions do you all have about the home buying process, whether this is your first home or your second home, before we jump over into this home selling process? I'm just going back through here because I thought I saw some questions earlier. Ratio. Okay. How would you recommend going about house hacking a new property and turning current primary residence into a rental, excuse me, I got a little tongue tied there. So basically, I think what this person is asking is, I have a primary home. I would like to buy another home and make that my primary, and now this would be my rental. What are the stipulations that go into doing that?
Again, it's going to depend on the program you go to. Uh-oh. Again, it's going to depend on the program. I'm sorry. It's going to be, that's a conversation for each individual, because again, it's going to depend on the program that you're going in, on how we would do that.
Is there like a certain amount of money that I need to have saved?
For an
do I need to
investment
have
property?
like 6 months of mortgage payment, anything like that?
So we're saying that if you have your primary residence, you want to
buy another house and then make my primary residence a rental.
Well, first thing is, if your primary residence is an FHA loan, you can't have two FHA loans at the same time. So that's very important. Very important. Can't have two FHA loans at the same time unless there's certain conditions, and those are hard to meet. So no two FHA loans at the same time. So if you have an FHA loan, then you're going to move up to conventional. It has to make sense. The scenario has to make sense, and to be able to make your primary residence now into an investment property so that we don't have to count it against you. Again, that's going to depend on the program that you're going to be using, the 4 different types that we have. And so that's another conversation individually that we would have with the person, and I can direct you on how the steps to take on what to do so that you can move up to the new house.
Awesome. Thank you so much, Marie. So we will, again, get you on that one-on-one call for the person that asked that question, and ensure that you get those questions answered. And understand, we're just generally speaking today because, everyone's experience is different. Things also vary with different loan officers. So I said over the next few weeks, I'm going to have several different people coming on, and different loan officers have different programs. The other day, I posted a flyer to my page. So go back to my page. It's open to the public. Scroll down, find a flyer where this one loan officer has a true grant program. It's true grant.
Yeah, I saw that.
Some of the stipulations that Marie talked about, you don't have to worry about with that grant program. So, every bank doesn't offer the same thing, but the basics everyone offers, okay? And so that's why we always like to talk with you, see what your situation is, and then connect you with the right person for you.
Can I piggyback on that?
Absolutely.
Nicole knows when you tell her your scenario, Nicole already has a select group of lenders that she knows exactly who to send that person to, because she knows which program different loan officers have to offer to you. So that's exactly correct. I have some programs that other people don't have, and we have guidelines that some other companies don't have. So every company is different. So she is exactly right.
And I'm glad you said that, because sometimes people ask me about shopping lenders, and I want to make sure I've got the best possible rate, but I don't want them to keep pulling my credit. Explain to them how that works.
Well, in order for me to give you an intelligent opinion or a sales price or a pre-qualification letter, I have to pull credit. Because so many times you'll say, well, do you know what your credit score is? Well, I don't want you to pull my credit. Well, do you know what your credit score is? It's in the high 7s. Okay. Well, when we get down to it and we pull it, sometimes it's in the 5s, and we can't move forward. So we have to pull credit. Sometimes you don't remember everything that's on your credit report. You don't remember all the debts, and we're just going on what you're telling me. So it's very important for us to pull credit so that we can go over everything, so we can see are there some things on your credit report that shouldn't be on your credit report. Some things that I can tell you to do to try to raise your credit score possibly. I'm not a credit specialist. I don't do that. But I can look at something and say, well, maybe if you could do this, maybe that, not that. Nicole has someone that she can refer you to credit. So it's very important that we pull credit. I have to pull credit to be able to tell you what interest rates are. there's not just blank interest rates. Someone will call up and say, well, what are interest rates going today? Well, that's going to vary on your situation. It's going to depend on your credit score. It's going to depend on your debt to income ratio. So just calling up saying, what's your interest rate going today? That's a very hard question to ask because everybody's scenario is different. But we have very, very competitive rates.
Someone says, what type of debt should I get rid of before considering a loan application? That's a very good question.
That is a good question. Unnecessary debt. Unnecessary.
That Victoria's Secret card, pay that off.
Pay it off. Credit cards that you don't need. Unnecessary debt. That's a hard one. Because what's unnecessary to me might be necessary to someone else. So again, we can go over your credit report and I can tell you, let's pay this off because it makes sense. And on certain programs, if you pay on FHA, if you pay off a if you pay off account to qualify, you have to close that account. Ooh. Yes. So it just depends on which program you're going with again. So every program, there's different guidelines to every program. So, if you can cut out all the unnecessary credit cards that you have, GameStops and, Finger Huts and all that. I'm not saying there's nothing wrong with those accounts, but are they necessary?
Yeah. Sometimes people.
And I don't want to offend anybody by saying that.
No. We need to know better. Mm-hmm. Sometimes people say, "Hey, I paid everything off, but now my score is lower."
Yes. Because everybody's situation is different. Sometimes you'll say, well, I paid everything off. That it makes sense for your credit score to go up if everything is zero. But that's not how credit works. Credit works on you having credit, having debt so that you can pay it on time. So if you have nothing on your credit report and you don't owe anybody, you don't have a credit score, and a customer will say, well, Marie, I don't have a credit score. I don't owe anybody. Well, we can't show a pattern of you paying people. So there's not a history of you actually paying debt. So that's why you don't have a credit score.
Yeah. And that brings us to alternative credit. Does your company do alternative credit? And if so, what's the stipulations there?
Let me check on that, Nicole, because since COVID, things have changed.
After COVID,
it has changed. A lot of things have changed. Things are coming back slowly, but that's one that I don't have the answer to that question. I'm sorry.
No worries. We do have a question in the chat. It says, is it true if you pull a credit report more than once within 30 days, and we're talking about a mortgage, okay, it counts as one pool, or does it count as multiple pools?
I'm going to be very honest with you. A credit pool is a credit pool. If I pull your credit today, it's going to be an inquiry on your credit. If another mortgage ABC credit pulls your credit tomorrow, it's going to be another inquiry on your credit.
But does it affect your score?
It affects your scores if you have a whole bunch of people pulling your credit within a short period of time.
Gotcha. Okay.
So you don't want to go out and have 10, 12 people pull your credit. That's just like when you go out shopping for a car, and these car people send your credit to 40 different people, and you have only allowed one person to pull your credit, but then you have 30 inquiries in a week time. Yes. So it's very important when you go car shopping to tell them, look, I've given you permission to pull my credit one time, not to send it to 20 companies and everybody pull a credit, because everybody has to pull your credit.
I'm over here about to start fuming because that's bringing me back to a bad situation I encountered where the same thing happened. But I ain't going to get into it, y'all. Not on this line.
It happens.
It does happen. It absolutely does happen. Now, we're going to jump over to home selling, because a lot of times people want to buy, but they also have to sell a house, okay? So what happens there, Marie, when somebody wants to buy, but they've also got a house to sell?
Well, if they have a house to sell, you have to be able to qualify with both of those payments until you sell that house.
Mm.
Yes, ma'am.
And that means you come to me to list your house. Yes.
Absolutely.
And then I am going to definitely ensure that your home, honey, is Motto Home ready so that you get the most bang for your buck. Okay. Now, curb appeal is everything. So I'm just going to drop a few tips here. Curb appeal, the outside matters. I had a client the other day, and I jumped on an Instagram stories one time and put this in my stories, but I had a client that said that her parents' house was for sale in another state, and it had been on the market for a little while. It's a pretty high price. And so I said to her, I said, well, you know, in that price point, you know, the homes aren't quite moving as fast. She was like, yeah, but it's been on such and such days. And I said, what does the outside look like? And she said, well, it does need a little bit of work. If nobody likes the outside, they're not coming inside to look at the inside. All they see is, and understand, in a certain price point, people feel like they do not have to do anything else to the house, inside or out, in this price point. So if you're in 7, 8, 900,000, sometimes in 300,000, people feel this way. Like, I'm paying 300,000 for this house. I shouldn't have to come in and have to do anything. Okay. So sellers, you want to make sure that you're putting your house in the best possible light.
Yes.
Curb appeal is everything.
Curb appeal is everything, because they'll keep going by.
We've got a question back over here on the buyer side. It says, should we pull our credit first through annual credit?
No. The reason why is because a mortgage credit report is different. I have people call all the time. Well, such and such, Credit Karma, Privacy Guard, all these companies tell me my score is a 700. Well, when I pull it, you're 600. Let me pull your credit, because a mortgage credit report scores differently.
That was a good one.
That was a great question.
Yeah,
great
absolutely.
Question.
Great question.
And you don't want to pull it, because that's going to be another inquiry. So let me pull it.
Yeah, absolutely. Absolutely. And especially with Credit Karma. Credit Karma only reports 2 of your
and Credit Karma,
the credit bureaus, and there's 3 of them.
It's never right. It's never what people say it is.
Oh, that's a good question too. Okay, this question: when pulling credit reports for mortgage, are all 3 reports used?
We pull all 3 credit bureaus. We pull from all 3 modules, but we use the middle of all 3. So we pull all 3, and it's the middle score that we use as your qualifying score.
And understand, everyone's middle score is different. For you, it could be Experian. For me, it could be TransUnion. For Marie, it could be Equifax.
Right.
Everyone's middle score is not going to be the same credit report. So if someone says, oh, they use your Experian, well, they use my TransUnion. Okay, everyone's experience is different. I need you to, that needs to be your pet answer when somebody says that to you, because understand, when you start the process, you will hear that more than not from your family, from your friends, and really anybody that you tell your business to is going to say, well, I didn't have to do that. And I want you to understand, first and foremost, ask them, did they buy in the pandemic? Because that's the number one thing that's different.
Well, I got my house and I got 0% interest rate. No, you didn't. And also, everybody's scenario is different. So don't listen to your brothers, your sisters, and your parents too, because everybody's situation is different. Everybody's. You don't know what was on their credit report. You don't know their credit score. You don't know what they put down. You don't know how much the house they bought. So everybody's scenario is different. So don't compare your situation to someone else's.
Interest rates are at historical lows.
Beautiful.
I once did a presentation a couple years ago down in Atlanta with a loan officer, and he went through the historical outlook of interest rates and how back in like the 60s and 70s, they were like 30% interest rate.
Yes.
And then we went to the 20s, and then you saw the 10s. And
I can remember the 10s and 13s.
3 or 4 years ago, we were at 5%, and now we are in the low 3s and the high 2s. And I'm telling you, take advantage of these interest rates while you have a chance. Okay, because if you say, oh, well, I'm gonna wait and see if it gets a little bit lower, Yeah, we're in a new administration, okay?
Mm-hmm.
And I love my people, but anything can happen.
Anything can happen at any given time.
Anything can happen. You got to take advantage now while you have that opportunity.
Yes, rates are awesome right now, so take advantage of it. Call, get pre-qualified. Let's see how to work it out. Don't be afraid. Don't be afraid. I will hold your hand and walk you through the process. We will get you in a home.
Any other questions out there while we still got the expert? So if they pop up, Marie, I'll say it, but I just want to take this moment and again, thank you for joining me on the call. Everyone at the, I don't know if it'll let me put in a comment. Oh, it will put in a comment. But I don't know the info by memory. So at the end, I will post it in the comments, how to reach out to Marie, how to contact her to get those one-on-one calls. And get any questions answered that you felt you didn't answer. Somebody said, what's a good amount to have in your savings? That is an excellent question. Come with the questions, y'all.
It is.
So, and that's a good question. What's a good amount to have in your savings? Because I tell people from a realtor, from my standpoint, to work with me, I want to see that you've got $3,000 saved up, okay? That has nothing to do with the lender side of things. Nothing at all. That's just, oh, I got to write an offer, and you have to put earnest money. You got to put due diligence. You need inspections. And I already know you're going to have an appraisal done.
Right.
So we want to make sure that you have a good amount. But Marie, from a lender standpoint, how much do you guys like to see saved?
Well, again, it's going to depend on the program. FHA, 3.5% down payment plus your closing costs. Conventional, 5% down plus your closing costs. VA, your closing costs, if you've used your eligibility, you might have to put some down payment down. So again, every scenario is different, but save as much as you can. Save.
Someone says, I purchased my home less than a year ago. Am I able to refinance a VA loan, and will I have to pay closing costs?
We need to talk, because absolutely you can refinance. Please call me. And if your house is has value in it, we can roll the closing costs in.
Someone is saying, should I refinance my car?
That depends on your scenario. You can refinance your car. If you're going from a 500 car payment to 300, absolutely, because you could qualify for more.
Yeah. And make sure y'all give us our likes and our hearts as we give y'all these nuggets and tools, okay? I'm glad someone mentioned about the car payment, because from time to time I have heard over the years that if with a car payment you owe 10 payments or less, then it's not factored into your debt to income. Is that true?
Depends on the program again. Yes.
Everything depends.
Everything depends on the program. Everything depends on the program. So everybody, again, that just goes to show every situation is different. Everybody's scenario is different. So there's, we're call me and I'll put you into the best program possible.
Is it best to up your credit line, increase your credit limit, increase your credit limit to get a higher score? Again, so they're not charging more. So, if they had 300, they may be going to 1,000, but they still not increasing their charge amount.
Again, that's going to depend on your situation, on your credit report. The reason why I say that is because it's going to factor in everything that's on your credit report, and it'll determine that if you get a higher line of credit, is that actually going to raise my credit score? So it's going to depend on everything, all your debts, what you owe, who you owe, if that's going to actually bring your credit score up. And I do have the tools to run your credit through a credit analyzer to say, okay, if you do run this up, it could possibly help you or it might hurt you. So let's leave it alone.
Now, I love the credit simulator, honey. And I tell people when they come back after they've run you through that credit simulator and they say, I need you to charge $10.12 on a credit card, don't charge $10.13 because that's going to throw the whole system out of the way. You got to do exactly what they say, okay?
Right. And those items are just starting to come back with COVID.
Wow. Wow. A lot changed in COVID, y'all. I mean,
it did. Everything changed. They broke us down. Credit scores jumped up. We couldn't do credit risk scoring. We couldn't do down payment assistance. Things are just starting to try to get back to some kind of normalcy, is what we're saying, if there is any normal. Now we're just adjusting to the new normal now and the new way of doing business.
Yeah. And again, y'all, that's why I decided to start doing these lives for Ask a Realtor. I'm going to be doing another one next week, Tuesday. Next week, Tuesday is not going to be with a loan officer, though. We will cover some of the same topics, but I've got a financial advisor who I'm going to talk to, because let me tell y'all, once you've got a home, there's some things that you need to be doing, okay, and ensure, and that includes life insurance. A life insurance person on as well. I've just got so many people that I'm going to connect you guys with so that you can get the info and make sure that 2021 is your best year yet. I'm super excited that you all tuned in. Marie, again, I want to thank you. Thank you
for having me.
I know it took us about 7 or 8 minutes before we got started. But I did promise you we would cut this out at promptly at 8:30, and so my clock is showing 8:30. If there's not any more last minute questions, again, I thank you all. You guys can always inbox me. You can contact me. You can text me at 704-439-7478 with any of your questions. You can go to my website, coleskeys.com, which is KOLESKEYS.com. You're welcome. You're welcome. You're welcome. Thank you for thanking us. We appreciate it.
For having us.
Make sure you all follow us on Instagram. Follow me on go to my Facebook business page and like my page, okay? Really, I want you to follow me on Instagram, though, because I just hit 2,000 followers like a month ago, and so I'm super excited about that. Trying to get to the next level, because that just means I'm able to reach that many more people with this great info, and so that everyone can